The US dollar is collapsing and it hit an extreme low. In addition to that, cost of living is not getting anywhere near where it needs to be in America. In fact, people are actually depleting their savings accounts because they can't afford basic necessities like food, shelter, and energy. As most of you guys know, we focus a lot on crypto on this channel. And we talk a little bit about other things too that crypto does impact, especially Bitcoin, because again, Bitcoin is a great hedge against inflation, geopolitical uncertainty, really just it could be used as a silent protest, all kinds of different things, right? Bitcoin and crypto is absolutely wonderful. And right now, the US economy is completely unstable, very, very unstable in my personal opinion. And I know I get a lot of people like, you're not an economist, blah, blah, blah. I just like to pay attention to how people are actually living. Like for example, when I was talking about this with, I went on a guest podcast yesterday. It's going to be linked in the channel down on the front page. But we were talking about how everything is increasing, but wages aren't increasing and the value of the dollar isn't increasing. For example, I've got Kaiser. My monthly premium went up from $403 to $442. That's like a 40% a $40 increase per month. That's $40. I could take my daughter out to Chili's and we could get one of those 3 for $10s and get Baja Blasted. And we can do a little family dinner, little family treat once a month. But now that $40 has gone towards a frivolous cost, because what are they using that for? And again, what is it? I'm not great at math over here. So 40 times 12. 40 times 12 is $480. Okay. $400 is a lot of money to people. All right. We're not seeing the creation of jobs. We're not seeing wages increase because overhead costs for everything is increasing. Yes, I understand that, we've got the tariffs and we've got these other things that are supposed to fix things. But in reality, the US dollar is declining. Purchasing power is declining. Everything is going up and most Americans just can't breathe. And that's another reason why we're not seeing crypto markets explode or money flow into the crypto markets, because people don't really have disposable income. However, in the long run, this will impact Bitcoin in a positive way because people will continue to start to put money in other places that will either bring them more ROI or just as a better safety haven. Because let's face it, US dollar is not going anywhere as far as up. But there's another scenario that I see happening. I can see that the US dollar getting destroyed or things getting so bad in America to where everything just merges over to CBDC to fix the monetary system because it's so broken beyond repair. I don't know. These are just like thoughts I think of randomly. Not even shower thoughts, because in the shower, I don't think about anything at all. I'm just chilling, but just like random thoughts as I'm scrolling the news and whatnot. Also, too, we're going to get into it, but something that's really funny is that everybody's like really upset about the C word over on TikTok. And they're complaining about this on like other platforms. It's all the same. It's really all the same. Really, really, really all the same. And the other interesting thing is that the way these algorithm works, all algorithms, they work based off of your preferences. So if you're searching for things, you're going to see those things, but I digress. Welcome back to the O Show, everything crypto every single day. I'm Wendy O. We're going to go ahead and get into what's happening with the US dollar and everything else in crypto because there's a lot. It is still stablecoin season. Also too, XRP, not my price prediction. Somebody put out, a financial entity put out a price prediction and it's a little crazy. It's a little crazy. Again, not my words. I know people are going to get mad and capitulate. It feels like we have already capitulated already. The comments, the sentiment that I'm getting on like TikTok or like Threads, Instagram, and Facebook with some of the content I'm putting out, people are just so done. People are just like, they're so angry and they're so mad. It's bear market energy. So I guess I can call for a bear market now. But anyways, I want to show you guys what's happening with the US dollar, what's going on. Shout out to Lawrence. Thank you so much for the $20 super chat. Shout out to Dale, to Mike, to Cherry, to John Legend, to Mr. R, to Gorgeous Alexandra, to Matt XRP. I love Donkey Kong. Love Donkey Kong. I actually wanted to get one of the little, what is it called? So I could play Donkey Kong, but they're like $500. So I'm like, I'm not going to spend $500 on that. Shout out to Callie. Shout out to Gamer. Shout out to Legend and to Sparkwater. And who else? Yeah, we give channel members a shout outs on this channel because, you know, gotta earn a living here. But let's go ahead and listen to some of the things that Mr. Trump is saying. Okay. And this is where we get the headline of he's lying. So let's hear.
Well, Mr. President, with the current value of the dollar, do you think it's declined too much?
No, I think it's great. I mean, the value of the dollar, look at the business we're doing. No, dollar's doing great.
Dollar's not doing great at all. Any way, shape, or form. U.S. dollar tumbles to a fresh 4-year low after President Trump says the U.S. dollar is doing great and he is not concerned about the decline. He says that it's doing great. It's not doing great any way, shape, or form. It's actually looking pretty dastardly. I don't know. But again, it fell a bit today. It fell all the way down to about $95. We did get a little bit of a rebound, which is great. And we're going to talk about the precious metals rebound because I'm getting a lot of comments and a lot of people weren't understanding what I was saying. So I'm going to explain it to you when I was talking about precious metals. But this is what the dollar looks like right now. And Bitcoin is up against the dollar. Well, dollar's up, but Bitcoin is up as well. We're trying to flip the EMA 9 over here. Ethereum's back at $3,000. Crypto market's not doing too terribly bad right now, but the US dollar is something a little bit concerning. Also, S&P broke another all-time high. Gold and silver both broke highs again, and they completely reversed all the losses, which we'll get back to that in a second. But the US dollar is not doing great. It's not doing great, okay? It's a 4-year low, 4-year low. And in addition to that, according to Barchart, we love those guys over there, but they put out a chart saying US dollar is now fallen below its 14-year support level. I mean, we got a little bit of a rebound, but it's not looking great. It's really not. And this just goes to show that the US economy is incredibly unstable. It really, really, really is. It's unfortunate to see what's happening, but it's the current state of the world right now. Now, the COP letter put out a really great report on a weaker U.S. dollar and what it means. Looser financial conditions, rate cuts. We need rate cuts like crazy. We really, really, really do. And again, I'm not really big about government intervention, but we already have government very involved in housing right now. You know, the Fannie Mae, the Freddie Mac, the FHA, blah, 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 blah. Give us 2% mortgage rates. If it's a single family primary residence, give everybody 2% mortgage rate so that we can buy, sell, do as we please. I have no idea what that would do to the rest of the economy, but it sounds like a good idea right now. Higher nominal GDP growth. So basically, a weaker dollar drives GDP growth. Higher asset prices. Higher U.S. exports and a lower trade deficit. Easier debt servicing for the U.S. government. And they said this is why Trump said that the dollar is doing great. It's not doing great. It's really, really not. It actually makes me a little bit nervous because I got kids. I got a child. So I don't know. Trump might think that the U.S. dollar is doing great, but it's not really doing great. The economy is not doing great. And again, I understand that the tariffs and everything else has a lot to do with this. And I also understand that things take time, but Americans are struggling right now. They really, really, really are. And Bitcoin's not going to fix this yet. It's a great hedge. It's great because as Bitcoin continues to grow, as far as price goes, which it will rebound. It's just a matter of when. It's a great hedge to have, in my personal opinion. And I know people like gold and silver and whatnot, but really, when you're trading gold and silver, it's just paper gold and silver. There was a viral post that was on X the other day about gold and silver, or about this guy that bought a bunch of silver and he wasn't able to sell it. He was able to sell it, but he was able to sell it at a 40% discount. Or somebody said, okay, I'll give you sell it to me for a 30% discount. No one's actually buying gold and silver. So again, gold and silver is great. Physical gold and silver is great when everything is completely collapsed. But Bitcoin tends to hold its value a little bit better, in my opinion. Because you're not going to get, when you want to sell Bitcoin at market price, no one's going to, I mean, people might say, hey, I'll take it for a 30% discount. But most of the times that's not how that works. You could sell Bitcoin at market price because there's a strong enough demand for it. So, and it's a little bit more transparent than gold, but I digress. Also make sure to smash the like, you guys. That would be helpful to push this out to more and more people. Thank you. All right, let's get into the XRP news over here. All right. 21 shares. They've got an XRP ETF, I believe. But they put out a funny report. Well, this isn't funny. This is really just their Like this is their price prediction. They said a base case $2.45, bull case $2.69, and a bear case $1.60. So these are their price predictions for 2026. Not mine, not mine. But they said this is supported by regulatory clarity and steady ETF inflows, and believe that XRP could rise to 269 if, not 589, if institutional adoption accelerates and strong ETF demand creates a supply-driven pricing. They said that XRP could fall to $1.60 if real-world usage and investor demands fail to scale despite legal resolution. Now, Franklin Templeton put out a report over here. I think we covered it yesterday. Did we cover this yesterday? I forgot. But anyways, they discuss XRPL with Paul Barron. The key points from the clip over here with the FTI Global Head of Innovation, as far as discussing growth and interest in Ripple. She said that XRP ETFs have launched successfully. Institutional retail demand is helping move XRP towards partly with Bitcoin and Ethereum ETFs. RLUSD adds a new business and utility layer that strengthens the chain's institutional appeal. She said institutional appeal. She didn't say retail appeal. So when I say XRP is a banker's coin, when I say Ripple is a banker's ecosystem, that's what I mean. The institutions, because you're not allowed to participate with the institutions. It doesn't mean you can't hold it. It doesn't mean you can't invest in it. It doesn't mean you can't profit off of it. But their current business model is geared towards the institutions, not to retail. Institutional banking, not retail banking. It's a very big difference. Growth in machine-driven transactions, a major long-term catalyst for XRP's use case, and XRPL global adoption, especially outside of the U.S. Especially outside of the U.S. That's another key thing. Outside of the U.S., not in the U.S. Make it an increasing, compelling institutional platform. Again, an institutional platform, not a retail platform. Now, back to the price prediction for XRP from 21 shares. I like it. I don't think it's bearish at all. I don't think it's bad at all. I think it's realistic. And they just said for 2026. And I think that XRP is one of the stronger spot ETFs. It's outperforming the HBAR ETF. Might even be outperforming the Solana ETF as far as cryptos go. So there's a lot of interest in it. It's just taking time because this is the current state of the market that we're in. But again, the cool thing about Ripple's ecosystem that makes it different from TradFi, even though they want to replace TradFi institutional banking, is that they do have XRP and that retail does have access to that. So that's how you profit as of right now. Their business model may change as we get the Clarity Act, which again, tomorrow, we're going to get some more information about the Clarity or about crypto market legislation. Are we going to get it? Are we not? Is it going to get delayed? Is the government going to be shut down? What's actually going on? That's exactly what's going to be discussed. We'll find more out tomorrow and the markets will react. But as of right now, Bitcoin is just doing its thing. Crypto is just doing its thing. We are going sideways. And again, we are just in this range. The range, it's a pretty big, larger range than we normally see. But again, it's between 86,000 and 94,000. You know, we're making some nice strides over here. But again, we've just been going sideways. And when we take a look at the weekly, this has been going on for a while. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks. 11 weeks. It's a long time. People get exhausted. People get tired. That's almost, what is that? Almost 3 months. Almost 3 months. It's a long time. But it is what it is. And it's another reminder markets don't care about you or your feelings. They're going to do what they're going to do. Now, Wisdom Tree over here, they've got a full suite of tokenized funds to Solana. Retail and institutional investors can access money market equities, fixed income, and other funds on chain. The firm manages $150 billion in assets. This is what they're talking about with RWAs. Right now, Ethereum is a leader in RWAs. XRPL is very, very small, and Solana is also leading. We talked about the BlackRock chart multiple times. And again, that can change. But this is where big money is placing their bets right now. And also, too, remember we talked about Coinbase last week, and them Coinbase and Circle they're basically putting everything on chain in Bermuda, which I personally think it's a test case to see if that can if digital IDs and CBDCs and how this works, putting everything on chain using one blockchain, or in this case multiple. But it's gonna be, I think it's a test case. But Bermuda is placing public government data on File Foundation, which is pretty interesting stuff. Over 1 petabyte of public materials already sits on filecoin through this effort. Effort focuses on resilience, transparency, and verifiable public records. It doesn't say public spending, though. It doesn't say public spending, and that's what I would like to see. I would like to see not public spending, government spending. I'd like to see government spending put on the blockchain. That way, people like Gavin Newsom cannot commit fraud in America with our taxpayer dollars. That way, we know where our taxpayer dollars are going. That way, we know how much a principal or the administrations at the public schools, how much they're getting paid. Is their job really worth $400,000 or $300,000? When it takes away from our kids like that, is it? I don't think so. I want to know how much they're putting towards roads. I want to know how much they're putting towards the homeless crisis. Because in California, it was like $100,000 per person or $200,000, something ridiculous. And there's no results. It just keep getting bigger and bigger because we got beautiful weather here. One of the reasons why I won't leave. But again, it's very interesting what's happening in Bermuda. And when we talked about it, I created a video for you guys. Go back and watch it. But over here, they're only putting certain things, not public spending or not government spending. Transparency and verifiable public records. So houses, maybe driver's license, insurance, that type of stuff. But as far as AI and RWAs and all kinds of stuff from Santiment, Santiment data shows Filecoin, Chainlink, and Definity leading crypto AI and big data projects development activity filed by Near Protocol, Oasis, and LivePeer. This makes sense. ICP, Chainlink out of all of them, I think is the big one. Well, no, Filecoin is apparently. Interesting stuff. Really, really, really interesting stuff. I love to see Flux here, but it's right underneath the graph. So I'd probably put these on your watch list. Now, Ethereum to launch standard for AI agent economy on mainnet next week. It's going to be ERC 8004. It's a proposal containing standards for AI agents. It will be live on mainnet soon. And it's going to be allowing them to participate in a decentralized economy. And the interesting thing about this is that we know that AI agents are coming. We've heard multiple people talk about how AI agents will be able to accept crypto and whatnot. So this just kind of tells you what to expect for the future. Everything is going to be completely digital. AI is going to be playing a big role. Crypto is great for AI because you can program AI agents to do all kinds of different tasks. So again, it's going to be interesting to see this stuff kind of play out. Bitwise registers Uniswap ETF trust. PETA for Grayscale. Grayscale Bitcoin Mini Trust ETF is now available on Morgan Stanley's platform, opening access to more than 7.4 trillion in advisor assets under management. It doesn't mean 7.4 trillion will flow into this, but again, this is just these crypto products, financial instruments. They're being pushed to all different money all over the U.S. Old money, new money, institutions, hedge funds, you name it, all of it. Now, Morgan Stanley taps veteran Amy Oldenburg to lead digital asset strategy amid crypto push. And this move follows Morgan Stanley's recent filing to list spot Bitcoin ETFs and Solanas, and they also plan to launch proprietary digital wallet later this year. This is from Fortune. Fidelity enters crowded stablecoin field with new FIDD token. And I think one of the reasons why we're seeing all of these different stablecoins being launched is because they're going to be for each different firm's ecosystem. It's backed one-to-one to remain a dollar peg. Available to retail and institutional clients. They plan to use FIDD to improve settlement efficiency across trading, brokerage, and wealth management platforms. So you're seeing all these different stablecoins come into play. And the reason why is because each TradFi platform, they want to have their own coin. They want to be able to, because it does help with settlement. It helps with transparency. And it also just makes things easier and faster and more accessible because dollar's slow. And this is all digital. So this makes sense. And this is why we're seeing stablecoins pop off. All these new stablecoins pop off. And they're not for you to like buy and invest in or any of that. It's for people that are using those particular TradFi platforms to have access to it, to have access to all the tokenization that's coming. That's what these stablecoins are for. And that's why they wanted to push it, because it actually improves the bottom line for all of these TradFi companies, for BlackRock and Morgan Stanley and whatever, who's ever launching them. Now, Tether. Tether is buying up to $1 billion of gold per month and storing it in a James Bond bunker. It also supports its XAUT stablecoin. Now, Tether launched an American regulated stablecoin based off of the Genius Act yesterday. It was announced. Gold is pumping. Stablecoins are moving forward. Bitcoin will follow eventually. But Tether is buying up to 2 tons of gold weekly, and it has amassed a 140-ton stockpile worth around $24 billion, becoming one of the largest non-government holders. Company's gold purchases are mostly for its own reserves, but also supports XAUT stablecoin. And gold prices have surged 90% this year. And this is a very, very, very interesting story. Now, this is from The Block. Tether will become gold's central bank in post-dollar world. He expects the company will become one of the largest gold central banks in the world. The company's plans to start trading its gold reserves for additional profit. And they own around 140 tons, worth around $23 billion, stored in a nuclear bunker in Switzerland. One of the reasons why they're acquiring so much gold is because of their stablecoin, because they need to actually have reserves to back it. So this checks out. But gold and Bitcoin are going to be incredibly important in the future. Altcoins will as well. But right now it's all about gold. Now, I want to talk a little bit about, there's a couple other things. What is this? A couple other things. I'm going to get into that in a second. We'll talk about this in a sec. All right. Oh, also, the Fed is meeting today to discuss what they're going to do with rates. If they're going to lower them, increase them, whatever. And by the way, the Federal Reserve has not complied with the investigation into Jerome Powell and has not provided any of the documents they were supposed to. Interesting stuff, right? Really, really interesting stuff. When you're not doing that, it tells me you've done something wrong. Because again, they're just wasting tax people's dollars. Now, I want to talk about this story. So silver, gold and silver, they rebound. So the decline that happened is completely been undone. Now, why did I put a video out talking about how $1.7 trillion was wiped out from gold and silver in under 90 minutes? And gold and silver's market cap combined is 41 trillion. Crypto's market cap is sitting around $4 trillion. So the reason why I made that video is because a lot of people like to call crypto a scam because of the volatility. But for gold and silver, and I understand gold and silver at all-time highs, but for gold and silver to pull for that much of a loss, 1.7 trillion, that's a lot. So when people say that Bitcoin and crypto is very volatile, it's a scam. It's volatile. Is it a scam? Not all of crypto is a scam. There's bad actions that happen. But the reason why we're bringing those two stories together is because it's important to note that the market doesn't care about you. It doesn't care about your feelings. It doesn't care about your opinion. This is going to do what it's going to do. And it will wipe you out if you're not careful, because moves like that happen. So if you want to call the volatility in crypto a scam, how a lot of money will pump something up and then remove itself, pump and dump, it's exactly what happened with precious metals. Now, this is an important clip telling us what's going to happen. And it's a very interesting, Mr. Rick Ryder. I like that name. It sounds like something, but he's going to probably be the next Fed chair, and he's from BlackRock. He's their global allocation head.
That's pretty powerful. I want to talk about the Fed and cuts. I just did a snap poll on X, and most people think 2 cuts. That seems the majority. Second most would be 1. And then 13% said 0. I'm in the 13% camp. I just don't see the need for it. What's the problem here? Why cut rates? Why change something if it seems to be going so well right now?
So I throw out one thing. So you think about Fed raised interest rates 500 basis points. What was the impact on the economy? Not really debilitating. And I think one thing that we've learned, the U.S. economy is not that interest rate sensitive. Technology-oriented, service-oriented. Most companies that fund CapEx today, the big hyperscales we're talking about, don't borrow. They do it through free cash flow. The interest rate tool is incredibly blunt, except for one thing. The housing market is incredibly sensitive to interest rate. We have a housing problem in the U.S. economy. There's not enough inventory. And I've said this before. Fed brings interest rates down. You actually reduce inflation, because what happens today, home builders are subsidizing mortgages. That's why you saw KB Homes. You've seen it with a number of home builders. You can't sell houses until you subsidize that mortgage rate. So they don't build enough houses. Inventories stay too low. Inflation, shelter inflation, which was the stickier part, doesn't come down enough. My view being, actually, we got to get that mortgage rate down, and we have to incentivize people to build houses. I don't think, by the way, you cut rates, you're not going to increase inflation. If anything, I think you reduce it. Listen, I think you got a bit of room that you can move the rate down. I think I'm in the 2 camp. I was still in the 2 camp when we were at 5 cuts 2 months ago, but I think they can do it, and I don't think it'll be debilitating, certainly to inflation.
I like this take from him. I really, really do. And you know what? He seems like a smart guy. He seems like I don't want to say a good guy, because I don't think anybody's any of these ivory towers are the greatest, but he seems like a smart guy, and he seems like he knows what he's talking about. And he's talking about getting mortgage rates down. I'm talking about how builders can build more so that the cost of materials is going down. I told you guys I'm in the process of like redoing some of the house. Nothing crazy. Gonna paint the bathroom. Gonna paint this office. But I might redo my bathroom because, well, actually, that's not important. What's more important is I've got some wood stuff that needs to be done in the backyard. Like I want to do a new fence and whatnot, but the price of wood is really expensive right now. So it's driving the cost up. The laborers are still getting paid. The blue collar workers are still getting paid what the rate is, the rate, but the price to do these things increases because materials are so expensive. So my point is that that's why house prices are increasing for that reason. So with that being said, I like this idea. And since we're talking about the dollar and whatnot, the dollar broke down to the lowest level in the last 4 years. We're at 14-year support. US dollar is declining, all kinds of stuff. But this is a very interesting story from the Cobbler, and I want you guys to really think about it. So the U.S. personal savings rate fell 0.2% points in November, which is the lowest since October of 2022, which was right after the panorama. And this is the lowest level since the 2008 financial crisis. That was when people lost their homes and they lost their livelihoods. Over the period, personal savings have fallen $469 billion, or 37%, the lowest since November 2022. By comparison, April 2020 peak was $5.96 trillion. U.S. consumer savings are now running 3 percentage points below pre-panorama 5-year average. Panorama savings has been entirely depleted. This is absolutely terrifying. And the reason why this is absolutely terrifying is because unfortunately people are having to have zero savings to pay for basic necessities, food, shelter, and energy. So the US dollar is not doing great right now. Inflation is out of control. And this is not only why we Bitcoin, but this is why we speak up about these topics that are impacting the monetary policy in America and the economy in America, because this isn't good. Americans deserve to have a savings account, especially responsible Americans. I don't know. I would like to think that these people that had savings accounts were responsible, and it was like an emergency fund. Everybody should have an emergency fund. But the fact that people are forced to liquidate their savings accounts to cover, which I'm going to assume it's to cover basic necessities, that's incredibly terrifying. And on that note, I'm going to get going. I've got some stuff to do today, but I'm sending you guys love and light. I will be back at 2 p.m. PT, and I will be back again at 6 p.m. PT with the complete news wrap up. And thank you to everybody on Rumble and on YouTube that's been watching me. And I'll be back tomorrow at 10:30 a.m. PT streaming. Bye, babies.